During times of economic turmoil, a weakening US dollar, inflation, or protection against deflation, precious metals provide a store of value and also a wealth growth opportunity. In today's economic climate, investors find refuge in precious metals as stocks get hammered and economic conditions worsen. Just think about it. The last thing you want to do is lose 30 to 40% of your portfolio's value because you weren't holding an asset that was anti-correlated to the market, meaning that as the market went down, this asset went up in value. And that's exactly what gold and silver are. So gold and silver became widely popular in more recent times during the dot-com bubble back in 2001, 2002. And then you saw another resurgence back in the 2006, 2007 time as the housing bubble became an issue, and then again as the Great Recession also continued during that period. Basically, as the stock market became more sketch, investors started to redirect. Makes sense. They were looking for an opportunity to still make money, even though the market was struggling. So what is better? Gold or silver? Well, there's no clean-cut answer, but we're going to talk about it a little bit more in depth today so that you can make the best decision for your portfolio. So let's get going. You never want to break the investing golden rule, which is hit subscribe and smash the like button because it helps with the algorithm. In order to compare gold and silver and make it a fair fight, we're going to look at 5 key categories: price, volatility, demand, history, and storage. After we go through each of those categories, you'll be able to identify which precious metal is better for your portfolio. So price. It shouldn't be the only reason why you buy an asset or you don't buy an asset, but if I didn't address the elephant in the room, I'll just feel like I'm not really doing my job. The spot price, which is the current marketplace price to buy or sell a commodity directly, for gold is currently sitting at about $1,880. For silver, it's sitting right around $23.50, making gold extremely more expensive when compared to silver. So if you were to make a $10,000 investment into one of these precious metals, you can purchase about 5.3 ounces of gold, or you can buy about 425 ounces of silver. When it comes to price, silver knocks out gold. Next up, volatility. And smaller companies, or in this case, smaller assets, tend to be more volatile because smaller amounts of investment actually move the price significantly more. Each year, about 1 billion tons of silver are mined, while gold only has about 120 million tons that are mined. From a scarcity point of view, gold is considerably more scarce than silver, but it also makes silver seem like it's 8 times as large of a market. When you actually look at the huge disparity in price point between gold and silver, you'll actually find that the value or the market capitalization of gold is significantly greater than silver. Therefore, gold is 9.6 times larger of a market than silver. This signifies that silver is more volatile, making gold considerably more stable. In terms of volatility, I like the fact that gold is more stable, but still gives me upside if the economy turns bad. The second round goes to gold. Now for demand, we need to understand the use case for each precious metal. And for gold, 2/3 of the demand really comes from jewelry and another 12% from medical and dental supplies. There's very little industrial use for gold, and that's a big negative. Silver, on the other hand, has a large industrial use case. You find it in batteries, solar panels, RFID chips, refrigeration systems, your iPhone. You pretty much find it in everything, in all electronics. Just a little fun fact. Your cell phone has about 0.34 grams of silver in it, which is about 27 cents. It's also got about 0.034 grams of gold in it. That's $2.08. So your net worth, if you have a cell phone, is at least $2.35. Hey, look, ma, I made it. No wonder why all these companies are willing to buy back your phone. Now, although gold jewelry looks great with my skin tone, when it comes to demand, silver is the winner. More industrial use case, more reason to have it around, therefore, silver takes round 3. What about the history of these precious metals? Well, gold is really dating back to about 4000 BC and silver back to 3000 BC. And even in the earliest times, you would find that both gold and silver were used as a form of currency because they were deemed as being valuable. And even as explorers came from the east to the west, they noticed that civilizations around the world were using these precious metals for their most important goods and as currencies. Even in the BC days, gold was always considered more valuable than silver. They would say that for every 1 part gold, there was 2.5 parts silver, and that was the ratio they used. This comparative tool is called the gold to silver ratio, and it's grown pretty considerably since the BC days. It currently sits at 78.6, which is well at its highs of 120, which meant that the price of 1 ounce of gold was 120 times that of silver. It's a big disparity. There's no story like his story. And with gold being around longer and the gold to silver ratio, gold gets the win in round 4. Lastly, we're looking at storage. And I'm sure you have a ton of gold bars and silver bricks just lying around your house. Hey hon, can you do me a favor? Can you grab the silver bars from the safe? And if you didn't know this already, gold is considerably more dense than silver. As a matter of fact, silver takes about 84% more volume than gold. So when it comes to storage, it's a lot easier to store gold than it would be silver. It's a no-brainer, gold's the winner, and it's a higher price. So I have the bout at 3-2. But let's go to the other judges' scorecards. If you want to buy silver or gold to hedge your portfolio, you don't need to buy the physical asset, we call it bullion. So you don't need to store it in a safe or underneath your mattress or anything like that. You can actually invest in a mining company, just like Warren Buffett recently has done.
Buffett update.
In 2020, Warren Buffett wanted to add gold exposure to Berkshire Hathaway. And how he did that is he purchased ticker symbol GOLD, which is Barrick Gold. When you purchase an actual mining company stock, you get the appreciation of the stock value, but you can also collect on the dividend. Another way is to invest in an ETF, an exchange traded fund. The ones that I personally invest in are GLD and SLV. So you have gold and silver. This helps diversify my gold and silver investment without me actually having to do all the underlying work. Experts suggest that 5 to 10% of your portfolio value in precious metals like gold and silver help diversify and hedge against a complete economic dumper. The silver lining is that you should like this video and subscribe to this channel. I hope you found some value in today's video. Remember, you are precious and so are these metals. As always, save, invest, and grow. Ciao, ciao.